I'd like to turn our attention to mechanics of the pick. It's now time to look at some of the picks that we've recommended in the past couple of weeks. This whole segment is where we talk about any follow-up adjustments or maintenance to trade recommendations that we have made. We have two different services. One is the premium service, where we provide a daily trade recommendation that we usually send out as an email between 4 and 6 p.m. Central. And the first pick that we recommended for this premium service is ticker symbol FDX. FDX has demonstrated a pattern of positive technical signs, and it looks undervalued at the current price levels. FDX have made earnings announcement a week ago, and it exceeded the earnings announcement that it was doing a week ago, and it also exceeded 2 out of the past 4 earnings announcements. FDX gapped up above the 6 months resistance level, which was at around 143, 146 level, and currently trading at about $160, and looks attractive at these current levels by looking at this flag pattern, chart pattern consolidation. Our overall score for FDX is 7.9 on a 10.0 scale. First, I want to take a look at the Tradespoon scoring. We have a short-term trend of the stock at 6 on a scale of 1 to 10, which is mildly bullish over the next 50 days. Second, we have the long-term conviction, buyer conviction rating at 7, which is on a scale of 1 through 10. Again, mildly bullish if you take a look at the 12 to 18 months horizon. And our long-term buy rating consists of both fundamental and technical analysis. Third component to this trade recommendation that I'd like to cover is the probability. If you look at the probability calculator, which is the tab on every trade recommendation, over the next 50 days, the stock is pricing at about 59.48% probability of finishing between $149 and $170. And so it means there is only 20% probability of FDX being outside of that range, 149 and 170. So now that we have the statistical data down by looking at the historical price action and looking at the implied volatility, forward-looking probability, let's break down the trades and what are the different strategies we can undertake based on the statistical data, the historical statistical data and forward-looking implied volatility data. The stock is currently trading around $159.96, and the stock has been in a grinding consolidation over the last week since the earnings announcement. The $160 is the level where the stock needs to break above and hold to see more potential momentum to the upside. It's trading at 52 weeks high. The November 155 calls are trading for about $7.60, and it's around $1.10 winner since we made the trade recommendation. So we already have 15% winner at the current price level. So manage the trade by moving up your stops. The spread is trading around $3.25. So 55 cents winner so far if you look at the option spread, call spread that we've recommended about a week ago. Again, manage the winners so you have your stop orders to take profits on the spread. Maybe close half of the position once your spread level reaches $4 and close another half of the spread when the price of the spread reaches $4.50. Make sure you read our daily emails where if we do close the FDX position, we will make sure that we mention this in our daily email. Now let's turn our attention to Elite Trade. Our Elite service is where we provide one recommendation a week. We have a lot more time, and we can run different models to predict where the stock is going to be in the next 50 days. So part of our lead service, we've recommended CVS, ticker symbol CVS, CVS Pharmacy. CVS has demonstrated a pattern of positive technical signs, and it looks undervalued at the current price levels. CVS has exceeded 2 and met 2 of the last 4 earnings estimates. If you look at the chart patterns, you can see how CVS reached that long-term support level at 77.5. CVS sound fundamental results, its strong distribution and services network are reasons good enough to believe that the bullish trend will continue in the future, and this base where CVS is currently trading will not be compromised in the next 50 days. Our overall score for CVS is 7.3 on the 10.0 scale. So let's talk about the Tradespoon scoring. Again, we have a short-term trend score and a long-term and a long-term conviction score. So the short-term trend for the stock is 10. That means on a scale of 1 to 10, we're very bullish for the stock for the next 50 days, and there's a very high expectation and probability of the stock being higher by November expiration where compared to the current CVS level. Second, we have the long-term buy rating at 9. Again, looking at the qualitative and quantitative research, looking at the discount cash flow analysis, stock is trading below its intrinsic value. So we're very bullish on the stock for the next 12 to 18 months out. Third, we want to cover the probability calculator, which comes with every trade recommendation. And based on the probability calculator, over the next 50 days, the stock finishing between $75 and $84, which is a 1 standard deviation move up or down. So if you look at where CVS is now and you look at the 75 price level, where it's support, and $84 CVS's resistance, that implies a 1 standard deviation move based on the historical volatility data, the past 50 days. So statistically, this means that there is less than 20% probability of stock being above or below those levels at expiration, November expiration. Now that we have the statistical data down, again, let's look at some of the trades that we can undertake in order to take advantage of that statistical analysis, which is very important when you structure your trade and select proper strike prices. One note that before we talk about the picks is that CVS has earnings within the current expiration cycle. As you see, we highlighted in the key stock events, which comes out for every trade recommendation. So we are looking at the November expiration, and we're seeing that CVS will have its earnings announcement prior to that. This is a critical binary event that you need to be aware of as you select the strategy and as you select whether you want to sell the premium or buy cheap calls. That's what drives the price selection, and it also drives the strategy that you want to undertake. So for the stock traders, if you trade in stocks, the CVS position is off the entry price, roughly down 20 cents. The stock has been stable and it's trading in a tight range. The November 77.5 calls are trading off its entry price of $3.95 and down about 20 cents since we made the trade recommendation. This is in the money call, so you need to monitor the time decay. You need to look at the theta, and as we are going closer to the expiration, the theta will increase and the time decay will become an important part of your trading strategy. If the stock does stay in a consolidation for the next few weeks, you may want to look to spread this position off, where you could sell the November 85 call this week, or if you wait, the stock is still not moving, you can sell 82.5 calls in November. Just keep in mind that with the time decay, you want to buy in the money calls, or you want to sell out of the money call to take advantage of the time decay. This does get us to the 77.5, 82.5 call spread, which we recommended for CVS. Those of you that did enter into the spread position at 77.5 call and you sold 82.5 call vertical spread for about $2.80, you see that the spread is trading around $2.75, so only down slightly since the recommendation we've been made. And taking into consideration the market sell-off and volatility in the past couple of weeks, I'm actually surprised and happy how resistant CVS to the overall market conditions. So we don't think that the CVS support level will be broken. So one note is that if the stock does not start to move over the next few weeks, look to see if it is prudent to roll down to the 80 call, because the 82.5 call will not have much premium in it. It will trade only for 10 cents or 20 cents. If and only if the stock pulls back from $80 and the conviction of the upside move comes into a question, you might want to exercise that and trade the 80 call. So use our focus list tool to stay on top of the short-term rating for CVS, and that will give you a bias whether you want to sell the 82.5 call and stay in that position, or if the short-term trend stays neutral, you might want to roll and sell 80 call and collect more time premium.